Yo guys, if you are a smart money trader and your problem for the market now to know where to buy the market for and now to know where to sell the market from, now you get this particular video where I make tonight. Now, the answer to your problem is external and internal structure. You see these two things, my guy. You see these two things, they do like 5 and 6. If you don't understand as traders, it go mess you up. Even though you understand this one, you don't understand this one, it go mess you up. So for you to have a high probability trades, a high winning rate, you must understand the two of them very well. Now, the first question I know you want to ask is this: what is external structure? According to what I have in my book, I said external structure refers to major swing highs and swing lows that define the overall market trend. Let me read that again. Look this market too. As I want to read this thing now, just pay attention to the charts. I said external structure refers to the major swing highs and low that define the overall market trend on higher time frame. See, the higher time frame, they very important. On higher time frame, not to say on lower time frame, on higher time frame. Now, if price they go up, for instance, now our price still they move, they go up like this, create series of higher high, higher low, higher high, higher low, higher high, higher low, higher high. If market they go up like this now, this kind of thing, this a bullish order flow, or you call it bullish. Price is going uptrend, but this is a bullish order flow. Now, the external structure now be this swing high, this one swing high, swing low, swing high, swing low, swing high, swing low. I say external structure refers to the major swing high. This is the major swing high. Major swing low. This is the major swing low that define the overall market trend. Now, what is the market trend? Uptrend. Now that swing high don't define now. That swing low don't define. Say this market they go up. Now wait till your external structure they tell you. With the help of market external structure, you know the direction where my market they go, whether they go up or they go down. All right, let's use this market as a case study. I'm currently on gold. This is a recent market. This is a current market on gold. Can you see that? Now, I said our external structure refers to the major swing high and low. This is the major swing high here that causes this big structure. This is the major swing low. This another major swing high, and this another major swing low here. We see another major swing high before we see market structure shift to a major swing low. We see another major swing high here, and we see another major swing low here. Right now, and I said another characteristics. Another thing to consider is shows permanent break of structure or market structure shift. What do you see? Break of structure, break of structure, break of structure. And don't forget, it must be found in your higher time frame. This is 4 hours now. I'm not analyzing this market from 15 minutes time frame. I'm taking this analysis from 4 hours time frame. So it must be found in your 4 hours time frame. Now, what happened? I said now, the question I want to ask is that at what direction do you think this price is going to without going to your daily time frame? At what direction do you think this price is going to without going to your daily time frame? At what direction? No doubt, bro, this is a clear uptrend. Now, with the help of this external structure, these major swing highs, major swing lows, we can be able to identify that price is what is in the uptrend without even going to your daily time frame. God is buying. The fourth characteristics or the four things to consider, this one is very important to, if you know they listened to me before, my guy, listen to me now. If you know they listen to me, my guy, listen to me talk. It is used to identify protected highs or low and major points of interest. Protected highs and major points of interest. You know, this is the recent big structure that took place here in the market. Let me take out this. And we see like this is like a point of interest. This is like an order block here. We have an order block here at this particular zone. As I drag it to the future, what do we see? Because why I classify here as another block is because we see a huge displacement. And they being there's no huge displacement, I will never buy here because I won't lie to you. I focus mostly on the second recent high. But the only reason why I pay attention to the first recent high is when I see a huge displacement, which price gives to us. So definitely, if you are to buy, you have to go for your lower time frame. You buy somewhere around these zones. You know, this is a very good buy. Targeting this high here. You see, price does not come to your take profit. So almost close to your take profit, my guy. Work for your life. Price don't give you this kind of move, my guy. Run. Don't get greedy. Now, there's something I want to talk about. So after you take out that profit, that's not the end of the market, because I told you that this fund is 30% of high probability, is a 30% probability. So the second one is 70% of a high probability of going in. This is what I mean. It's a top for my charts now. Here, I tell you something. Say here, this particular zone, now 30%. Here now, 70%. So yeah, I buy from here. Why? Because of huge displacement. But no me say I don't still buy from here. Now, what happened? We see that price was able to go up, and we see price breaking out from this structure here, which gives us a market structure shift to the downside. Pay attention, please, because I've taken out this low. Now, and I say that used to identify protected highs and low. We have identified our breakout structure, our other block, which is our POI. Now we have to identify our major lows, our protected low. Now you know that when price is coming back down after this market structure shift, a lot of traders want to pay attention to say the market at these zones, telling that this is the other block because this is the second reset low. But I will tell you that for me, I'm going to buy at the protected low. That's why protected low is very important. See, my guy, I don't know why I want to do it. You see protected low, I beg, make sure you understand and where. So that you know when they missed out, it will help you, it will guide you. It will help you to know the particular zone where you're supposed to be buy from, where you're supposed to be sell from. Now, see what's happen. See what's happen. After we see this a break of structure here to the upside, we will see a positive move. I tell you something about protected low. I say number one, for you to consider a particular zone protected low, number one, you must see a huge displacement. You see a displacement here. See bias there. Number two, you must see a change of character. And we see that price was going down initially before we see what price going up. Now, another thing I said, this is a displacement. Another thing I said, the low before the break of structure or change of character. This is the low before the break of structure or change of character. These are the things to consider for you to know a protected low. I said now drag it to the future, because this is the low that caused this break of structure to the upside. Drag it to the future, and what do you see? Price mitigated into the low. Price mitigated into the low. And I told you, don't buy immediately, because if you are looking out to buy immediately, let's say you want to buy, I want to buy, aggressive trader, I want to get patience. Once they don't see this impulsive move like this, what they go do, they will just buy from here. Don't buy, sir. Don't enter the market. put a stop loss somewhere here, target this high. Price can go to that direction, but this have low probability that price will hit that take profit. That take profit. Even though price hit that take profit, it might take days. So this one, it's not good for you to buy like this. And if price go against you by guys, yeah, you go lose about 86. This is about 86 pips if you blow your accounts. So for you to trade like this is very wrong. What you need to do is to look for the other structure, which is your internal structure. This internal structure, it good very well. You know what this internal structure they do? Internal structure, they do many things for the market. If they make you to redefine this your entry, it will help you refiner. It will refine this your entry. Now, let's talk about the internal structure. I think internal structure refers to the small price swing within the external leg. Look at this. This is the recent higher high of the market. This is the highest high of the market. So this, what are we seeing? We are seeing what is small price swing within this range. This swing you are seeing now, where this is, so this pullback, is your external structure. So it's your internal structure. And what does this internal structure do in the market? What do they function as? I said it provides setup confirmation. So it helps you to confirm more entry before you go in for a buy. You need more confirmation for this market, because if you want buy, you get low probability. If the market go against you, bro, your account will blow. So you need more confirmation, more confidence before you go start buy. And that more confidence, then with this internal structure. And what are the major characteristics? What to consider for you to know your internal structure? Number one, I said it is found in your 15 minutes time frame, 5 minutes time frame, or 1 minute time frame. For me, the 15 minute time frame. So I'm calling on my 15 minutes time frame. Now, this is the mitigation here in your 4 hours. That's the symbol of the mitigation in your 4 hours. Please pay attention. Now here, trading hard pass. Now here, trading hard pass. This is our entry module. Where to enter for the right place. Now there, trading hard pass. Pay attention. Now let me delete this. Let me delete this now. If you know the mitigation, and let me just drag this. I will use that in later. Now, where is our recent break of structure? Where is our recent change of character? Because your internal structure, it will make you know how the market they move internally from the 15 minute time frame. Look at now, market they go down, they go down, they go down. Where is our recent lower high? For me, because of this big move, this is our recent lower high. This is our recent lower high. And what you will see, this is our recent lower high. They could give us what? A change of character. Let me mark it. Which give us a change of character to the upside. A change of character. Please, now here we see, now here we get problem, traders. Now here we get problem, this entry. And I say another thing to consider an internal structure is this. It's used for snapper entry and lower time frame break of structure and change of character. Can you see after this mitigation we see a change of character, which is from what? Our internal structure, not external, from the 15 minutes time frame. After we see that change of character, we are looking for what? Snapper entry. Where will our order block be? Let me delete this. Our order block, where our order block will be? Our order block will be here. Our order block will be this. Because if you look at now, this other block, now get this displacement. You see, no candlestick will get huge displacement. Always consider displacement. Always consider displacement. I think God beg you. If you look for other block, consider displacement. Change of character. The last bearish before the major move. Can you see it? This is the last bearish. This is the this one and bullish self before the major. It's drag it to the future. Maybe other block. You know, understand? Now there you could see your snapper entry. What happened? Price come. This is good. And what? This is our. We have a fair value gap somewhere here. It's a fair value gap here. Here. I can mark out this entire zone as my other block. This is like I can mark out this entire zone as my other block. This is like a range marking. Okay, this is our fair value gap. It's our fair value gap here in 15 minutes time frame. 15 minutes fair value gap. See, after price give us fair value gap for here with this other block to confirm that this is a valid other block. What's happen? What the price give us? What the price give us, my guy? He give us waiting. he give us waiting. I said because he give us waiting a morning star candlestick. Can you see? A morning star candlestick and fair value gap are one of the major characteristics for you to consider internal structure. Anywhere where they buy from your internal structure, if you not get fair value gap and other block, no buy. What make me buy now? Because I see fair value gap for here. I will see now lay here, now that displacement go. No any candlestick will get that displacement. And now the displacement must get fair value gap. Price comes to that fair value gap and it give us money star candlestick. See here. Now, where do you want me to buy? After I see this money star candlestick, I will buy somewhere. This is where I will buy. I will go in for a buy here. And I will put my stop loss. Let me zoom out this. And I will put my stop loss just below the fair value gap. Just below the fair value gap. Here. Because my money star candlestick don't guide me. I will put my tip profit to this key zone. Guy, what is this? This is about ratio 1 to ratio this. It's about ratio 1 to 6, my guy. 1 to 6 is what you should say. This one 1 to 4, and this one get low probability. See this one, price don't hit my take profit too. High probability trades that price go hit my take profit. Price is one. See my stop loss very low. My risk very low. With this risk now, I will trade like 5 times. I will trade like 10 times, 30 times for the trade. But if I follow with this risk, I don't trade past 2 times. My account will blow. But with this one, I will trade past 10 times or 20 times for the market. That's why you need internal structure. So the purpose of external structure is for the direction, and the purpose of internal structure is for your entry. So your internal structure for your entry module, you need internal structure. It is important. If not, my guy, if price hit your stop loss, it don't finish market. So it's very good for your risk reward ratio as well. As you can see, our community will increase, my guy. See 2250 guys, still they play. No one join the winning team. See, I never post set up. I never post. See, money guys. If they play, you never join this community. I pity you, my guy. That's it. Link in my bio if you join my family. And if you want a copy of my book, kindly send me there. And don't forget our mentorship coaching class is still going. It's still ongoing. And bye for now.